How's it going, everyone? It's Sam. Today I want to go over NAT stock, STNG stock, and this is almost like a weekly episode now for me where I'm going over the spot tanker rates for this last week and seeing where they went, because spot tanker rates are the cost of a tanker basically to be hired out for a day. So this is something that kind of gives us insight into how much the companies are making. And NAT stock, one that I really like covering, but I think there's been some bigger news with STNG stock, and it's something that we can really break down, and I'm pretty excited for it. So let's get started, but before we do, please hit the like button. It really helps out the channel and it helps me out. And then also, if you want to get some free stocks, you can use the links below to WeBull and get your 2 free stocks if you deposit $100 or more. So let's look into it here. NAT puts up this weekly tanker market report, and it shows week to week where the tanker rates are going. And as we look here, we can see that last week the tanker rates were higher than they were this week, and it's pretty significant. So with Suezmax or Suezmax, they dropped about 10 or 12% from last week to this week. They're down significantly on the year. When we look at some of the other tankers, they've dropped a little less significantly. But even the general index dropped from about 29,000 a day to about 25,000 a day. So this is another pretty big drop. We've seen this in the past. Now, something that I like to consider and remember is the fact that a lot of these bigger tankers, tanker companies have had long-term contracts. So they sign people for multiple months on end, and they were able to sign them for much higher rates than they're getting right now. So that is something to consider. I also will say too that the rates that Suezmax are getting right now compared to the average from 2020, they've dropped a lot compared to some of these other ones. So if we look at something like a VLCC, which is a very large carrier essentially, VLCCs have dropped only about half. So they went from about 94 to about 46, where Suezmax has dropped from 53 to 12.5. So that's about a 75% drop instead of a 50% drop. And that's pretty significant. And that's something that you should definitely keep in the back of your mind, because that means that they're making essentially a lot less per day than they were making before. And for Suezmax, it costs about $8,000 a day just to run the ship and everything. So they're getting into really low rates. That being said, this is a slow time of the year for them. So if we just look, this is the tanker market index. Around June and July usually is when they are already at very low rates. So this is just for all tankers in general, not for Suezmax necessarily, but this is a slower time of the year for oil tankers. Now, STNG came out with some interesting news where they announced an update on their daily TCE rates. So these are time charter equivalent revenues, and basically what these are, they're pretty much revenue minus the voyage expenses, including bunker and port charges. So I don't know if every single expense is taken out of here. I assume there are still management costs and different things like that that you have to account for when you talk about these companies. But they gave us really how much they're making in revenue after they have to pay for maybe the 8,000 or so that it takes to ship these ships out. So as we can see here, it shows 47,000, and they have the Q2 numbers and then what they have for Q3 so far. So let's take a look at each of them individually. So if we look at Q2, this is minus the 8,000, remember? So this side is not minus the 8,000. So LR2s, 47,000, 49,000 a day. So really this should be more like 55 because of the 8,000. About 36,000, 35,000, 22, 25. So STNG is actually a little bit higher than what's showing in the tanker market index. And then if we look at total average for Q3, they're lower. We knew that because it's been dropping. And this is just what they have so far, as I understand. Because if you look at the percentage of days, that's a really low amount. This is just what they already have locked up for Q3. But when we look at this, this is still much higher than it was last year. So 29,000 a day instead of 19, 29,000 again, instead of 14, 17 instead of 13.6. So this is still up significantly for STNG, and they do have different carriers than NAT does. So NAT has different ships, they're Suezmax, and STNG has LR2, LR1, and MR, along with Handymax, which I think is just a smaller version. So what I did was I took these numbers that they gave us for Q2, and I figured out really how much revenue this means for them. So the ship I have here, the number of ships, the TCE, number of days, percentage of days, and then the total revenue. So LR2s, they have 42 of them essentially. They have 42 of them. They have them at about 47,000 a day, and they have them for 93% of the days. There are 91 days in the quarter, so I multiplied all these together, and we find out that minus their expenses, they are about $167 million in revenue for this quarter just from LR2s. Then as we go down the line, we can see another 37 million, another 108, another 31. So I'm not saying this is exactly correct because there are other expenses that come out of it. But if this is somewhat accurate, we're looking at $343 million in a quarter. And this is a company that has a market cap of under 900 million. So that is an insane amount. This isn't necessarily net income, but it's not revenue either. So again, this is minus the expenses. So this is probably somewhere in between their net income and their revenue. That's a massive amount for one quarter. I think that they're going to really surprise some people with their Q3 results. And again, I'm not a financial advisor, I'm not a stock analyst, but this is kind of how I look at things. If you look at how many ships they have or how many products, how much of the time they're using them, what they can get for them, and just the amount of time that they can sell these for, they have massive numbers. And I think they're going to surprise a lot of people. They're a company that has been dropping this week. So I'm excited to see their Q3 earnings. Now, there was also one other thing that I wanted to show you. And by the way, if you want to look at their different tankers, you can find them all here. So this is where I found the number of each of their tankers. But they have it listed in other articles too. But this is an article about Robinhood effect and how it's spread unevenly across tanker stocks. So they specifically name NAT, and this is something that I've discussed for a while here. A lot of people ask me, why are you looking at NAT stock versus something like STNG or Frontline or DHT? Because those companies have a lot better price to earnings ratio. They are a much better value just from a balance sheet perspective. But what I say is, not everything is about the balance sheet. So what I mean by that is, we are humans, we are not robots. We don't trade just based on what the fundamentals say. A lot of people don't even pull up a balance sheet. I would say, I don't know exactly the number, but I would say 1 out of every 2 people doesn't take a look at the financials or the balance sheet or income statement or anything like that. They just buy because other people are buying, the stock is going up. They think, or they hear that that's a good sector to invest in and it makes sense to them. So then they put money in it. So what I'm saying is that I think people base their trades on emotion a lot of the time. So NAT is a stock that everyone thinks of when they think of oil tanker stocks, especially if you're not well versed in the space. This is what you've heard of. The CEO went on Jim Cramer, talked about how they're making money like crazy. And this is what this article basically says. They say that basically people really thought that they were making a lot of money because they thought that the fact that these companies can sit on oil will make them a lot more money than what they typically do, which is move oil from place to place. And essentially they said that the companies and the tankers that are the largest will benefit the most from this. So VLCCs, very large crude carriers, are going to have the best outcome for this because they hold about 2 million barrels of oil as opposed to the Suezmax, which carries about 1 million. So obviously they're going to be able to make a lot more money because they can store so much more oil. However, the main person, or the main company I should say, that took advantage of the huge supply of oil was NAT, at least in the share price, right? So they went up way more drastically than DHT, than STNG, than FRO. So they were able to really reap the rewards of that. And they basically say in here that that's because of the Robinhood effect. So a lot of people heard about it, a lot of people invested in it because of all the hype around the stock, and then it's not really based on fundamentals. That is kind of just backing up the point that I've made in the past. Now, I am planning on still holding STNG and NAT and DHT. I own all three of them. But again, they're a small position in my portfolio. Relatively, they're just a couple percent of my portfolio, but I think that they have really good opportunity in the future. I also am planning on holding them for all different reasons. Like STNG, I think could double this year, hence why I bought more of it this week because it dropped in price. And I think NAT is really the stock to watch. Everyone pays attention to it more than other stocks. It's got high volumes of trading. DHT is also just another really good value play. So that is kind of what's happening this week. I still plan on holding through the earnings call or through the ex-dividend date for this next quarter. So that's where I'm sitting right now. But I want to give you guys the update because we got new information on the spot tanker rate, and then just some other information came out over the week. So again, if you guys don't mind, this video is sponsored by the like button. So if you don't mind hitting it below, it's that little thumbs up at the bottom of the screen or right below this little box. So I appreciate it. Thank you for watching, and I will see you in the next video. Bye.